for a day and a time. And it's wonderful to have you on board. Thank you, Marlon, for that. And welcome, everyone. Hope you're having a wonderful day and week thus far. News on tomorrow. Maybe just holding the market back a little bit today, but I do notice there are a few moves being made on the dollar at the moment. Maybe people are buying into tomorrow's CPI data. Exactly. So with that in mind, do we think we're going to get a breakout today? Look, it's entirely possible on pound versus the US dollar and everything versus the US dollar, given that buying on the greenback may in fact follow through. But then again, it may just quell the market as well. Let's have a look and see what our range is today. We've got all of yesterday. The high of yesterday was about there. The low of today thus far is 94 pips of range. And those of you who are here for the first time, welcome. You probably got no idea what I'm talking about. Each and every day I look for a potential break of a consolidation pattern or a range, if you like. And the parameters I choose, this is on pound versus the US dollar at London Open, right? So the one I'm choosing to use today, and always, maybe I need to change that. We're not getting too many entries, I've got to say, is the complete range of yesterday plus the range thus far of today, if it is, of course, outside yesterday. So the high of yesterday is that level there, and the low of today thus far is that level there. So that is the effective range that we're trying to break out of. What I do prefer to see most often is when price is in the middle of that range. Of course, for any breakout trade that I take, I want price to be away from the potential entries, because a little spike like that can take you in, and then, of course, it goes in the opposite direction. That is not a rare thing in the first candle of London Open. In fact, it is the reason I don't trade the first 30-minute candle of London Open. So I'm a little bit reticent to look at a breakout when you're trading straight into a monthly pivot, for instance, and the lows. What we try and achieve is 1-to-1 before we take any profit. So in this case, the range is 94 pips, and if I was to take profit at 94 pips, my take profit level is down there somewhere, well below the lows, well below the monthly pivot, which of course has 1, 2, 3, 4 times now rejected price thus far this month, and we're only in day 9. Tells you a bit, doesn't it? Of course, some would say the more it goes there, the more often or the more likely, I'll get my tongue around that, it is to break that level. I don't necessarily subscribe to that. In fact, I say the more it bounces, the more likely it is to bounce. Take your pick, watch your poison. So to summarize, I don't want to trade a breakout to the short side. Do I want to trade a breakout to the long side? You can see I've got an order long there anyway, and I'll get to that in a tick. In fact, I've got a few orders in the market at the moment. So 94 takes us to up here somewhere, well above the highs. But is there anything else in the way is the question. I'll go out a little bit further. That high there. But that's, what level is that? 126.65. And we are at 125.90, so 126. So there's no room to take our profit. So for that reason, it's a no again from me on the breakout for pound versus the US dollar. I might have to do a little bit of back testing and see if we can find a better way, because we're not getting any trades on that at the moment. That's not a bad thing. If you have a look at this market, wow, do you really want to be trading breakouts there? Gone, 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 gone. No, it's not the right market. So why have I got an order on pound versus the US dollar. Okay, I've actually got two. One is on the daily chart and the other is on the monthly chart. This one's the monthly chart. For those of you who weren't in on Monday, I'm trading this bar here. So last month's bar, and I'm looking for profit up here and in extension way up here somewhere. So that on a risk to reward basis, I think that's a reasonable order to take. We've got big base being formed here. Every time we come here, we're going off, and I anticipate if we get into this, we'll go to at least the top of the range, which will, I think, was worked out to be about 3 to 1. Need to share my chart, really? Thanks, Sweet. Sorry, I thought I had done that. Wow, I've been talking for a long time without that. Sorry, I've been concentrating on my charts and not my chat. That's the thing, right? So looking for that bar to go to at least at the top of the range, which, as I said, is about 3 to 1. And if we can get it a little bit further and reversing, not that I think fundamentally it's likely to do that short term, but long term I do. You're talking, 10, 12 to 1, if that actually panned out. Long way between now and then, of course. That could be 2029. But I'm thinking Easter or Christmas, we could be up here, and that's the reason I've taken that one. Pound versus the US dollar on the daily chart, different story altogether, except it is still going long. And my reasoning here is that we may well have formed a left shoulder, a big head, and a right shoulder here. The one thing I did say, and there's a couple that looks like this, that I'd like to see a break to the bottom and through the monthly pivot, rejection of that, giving us that level there, which it has all but done. So that big buying bar there on Tuesday is a game changer bar, one of my game changer bars. And then we've got an inside bar following that up. Now, this is not really with the primary trend, which is kind of where I need to be to actually play that full strength. So I'm actually playing that, I think, a 1/4% or something. Yep. But I think this has got distinct possibilities. It is, after all, a double cross on the weekly pivot. And double cross, for those of you who've got no idea what I'm talking about, is a decisive break of a pivot and a decisive retest, or really I'd like it to close below once it goes across. So double cross meaning cross that way, cross that way. It's close enough for mine, and I think that's a reasonable position to take also. It's a little bit premature maybe, but we'll see how we go. If that is indeed an inverted head and shoulders, then the neckline is here. And we've got plenty of room to take profit before we hit that neckline, which, of course, is exactly what I will do. I've got a TP1 at 50 pips, which is about there somewhere, I think, on the close of that. Yep. The open of that, rather. So that's where my TP1 is. Levels, if you want to follow it. 1.2603 is my entry, and I've got a 92 pip stop loss, which is underneath that bar. Sorry, underneath that bar. And as I said, my first take profit is the open of that bar there. Righto, that's that one. A few more to get out of the way. Just a review on dollar CAD. Dollar CAD, we've been trading since here. Can't remember what we entered on. Probably that bar there from memory. And we've trailed this down now. My stop loss, those of you who aren't up to date with that, has now been trailed to 126.23, and I've removed my target. My target was here, down at 124.65, I think it was. I've removed that, and the reason I've removed that target is we've taken 2 lots of profit here. We're trading for nothing, and we can only win on this. It's just a matter of how much we win on this. The reason I've removed the target is I'm now risking 50 pips for the target area, which was down here 109 or 110, so a bit better than 2 to 1. But we do have that CPI figure coming out in the States tomorrow. And if that were to be kind to our trade, this could easily, in my humble opinion, finish up down. Well, I've got three targets, one there, which is 150 pips, one there, which is 260 pips, and the third target, and the best one of all, of course, is 500 pips from where we are. So that's a 10-to-1 bag on this particular section of the trade. That's why I've removed the target. Happy to sacrifice the 50 pips if that is necessary in order to get that whatever's available to us down here on dollar CAD. Don't forget, I'm a long-term bed on the US dollar, so every opportunity I get to take advantage of that bias or to go along with that bias, I will do so. Now, also trade the NASDAQ for the very first time on Monday. I think it was on Monday. Might have been Tuesday. Those of you who aren't in the Telegram group may be not aware of this one. I think I did trade it on Tuesday. I'm not quite sure. But there's the bar that I traded. Again, game changer bar, this one here. Of course, it was preceded by one as well. So there's kind of a rub me out style going on there. But then we got the inside bar. Once we got the inside bar, that's my trigger to go short, which I did. Went short here. And I forgot to put in a TP1. And I didn't get my TP1, of course. And I didn't even put my stop in the right place, which was there. I had a shock, honestly, when I placed this order. I put my stop loss here somewhere, halfway up the candle. What a dope. And, of course, my stop loss has been hit, and I'd be still in the trade, just in drawdown at this point. So what I've done, I've just put another 0.25% order in the bottom of that bar, because really everything is still inside that seller bar. So I think this can explode, and it may explode to the high side. But if I look at this scenario, I think we've been through this support level. We've come back and retested it. And on the weekly chart, I've got, again, a game changer bar, which suggests to me that we're going to see a little bit lower pricing. And on the monthly chart, you can see that we've had phase 1, phase 2. Have we had enough rally for phase 3 to begin? I don't know. I can't answer that question. But to me, I'm getting the signal that this can go short. And for that reason, I just don't want to miss it. So my second attempt to trade the NASDAQ hopefully works out a little bit better than my first. I've also got orders on, well, you've got the 2 orders on the pound. I don't want to talk about Euro Swissy, but I will. This was a game changer bar on the weekly chart. This bar here, which of course is to be traded long above the bar, stop loss below it. We had the monthly pivot there backing us up as well. I didn't take the trade, but it looks as though it's full of running. That one looks okay. Aussie dollar, I haven't got an order. Euro Aussie, I haven't got an order. Pound CAD, I haven't got an order. Pound Aussie. Oh, no, the reason I was looking at the hourly chart there a while back, and I didn't place the order, but there's a clear false break scenario going on there. Maybe if this gets back up here, I can replace that order. We'll talk about that later if we have time. The euro, I have an order, and this is based on the daily chart. And the daily chart is pretty clear to me, and I said this on Monday, and I have placed this order twice now, maybe 3 times now, where we've got a clear break of the resistance trade line. We've got a clear re-entry. We've got a clear retest, and we've got a double cross on last week's weekly pivot. Problem, the monthly pivot's dead ahead and is as yet untested. I'm trusting that, but I'll certainly keep my eye on it very, very closely. If we look like bouncing off that, I'll probably just close the trade or move my stop to entry or something like that. But if you want to have a look at that one, the entry is at 1.0643. Got a stop loss at 108 pips, and my first take profit is at 82, which is the close of that bar there, or the open of that one there. I can't remember. 105.61. It must be the close of that one. So that is that. Now, if you want to cry in your beer, here's a reason. Pound versus the Swissy. Now, last week, or was it 2 weeks ago? No, it was last week. We placed this order long above this bar here, this being the breakout bar. And we placed that on the Monday, I think even in Trading Buddies on the Monday, could be wrong. And then we got this bar here, this bar here, this bar here. So every one of my daily orders expires at the end of the day. So I replaced it when we saw this candle. I replaced it when we saw this candle. I replaced it when we saw this candle. And then I said, oh my God, what am I doing? Wasting my time trading this long or at all. It's doing absolutely nothing. And of course, as soon as I stopped trading it, away it's gone. Now, would I get back into this, or not back into it? Would I get into this should I get the opportunity? The reason we traded that in the first place, let me get rid of that. The reason we traded this in the first place was because we figured if the sellers are going to bail out, they're going to bail out and they're going to be wrong here. And they're going to come back into this range and we're going to trade it to the top of the range. Well, we missed out and we've gone quite a distance into that range now. So we're halfway there. I'd want to see a really decent pullback here to get me interested now in trading this long. But it does look full of running. And I'd be very surprised now if it doesn't go to the top of that range. Maybe a pullback here, smaller time frame later on. We can look to get into it. But yeah, it's crying in your beer time. Hello, Ash.
Hi, buddy. How are you going?
There you go. I'm good. Yeah, I'm good. How's your week been?
Oh, mate, it's been good. I've had a late night. I went out with a friend last night, so I'm just. You're
killing yourself lately, mate. Jeez, I wish I was as young as you.
I'm just trying to establish whether I should get into this market. I've got a potential trade here that you know. Let's talk about it. And if you're done, mate, if that's.
I am done, mate. That's
yeah.
I mean,
okay.
that's enough. I've got 4,000 positions on, so.
Well, there's a potential trade on the Ftse for a short. So let's have a quick look and see whether we want to take the trade on. I'm going to go here and there. So here we are. I've already got a position in from yesterday. This sell position here, and I'm aiming down here, but. We've just got to this point of support here, but there is a weekly pivot, which I don't know why it's not coming up on my chart actually, but there's a weekly pivot just in this area here, around about there. So if it comes up to there, then I might well take on the short. It's kind of adding to the position, but what I'll probably try and do is leave this one open for the downside and just try and make a little bit of cash on the day, you know, sort of like going between the levels. I thought that NASDAQ position that you've put in is really interesting, mate, because when I look at the NASDAQ chart, and this is the amazing thing about how you see, you know, two people can see a technical pattern completely differently. Because when I look at the NASDAQ chart, all I'm drawn to is this inverted head and shoulders. And it makes it difficult for me to call anything for the downside. There it is there. So the inverted head and shoulders makes it difficult. And the obvious neckline is, I guess, somewhere in this area here. That would be you know what where the inverted head and shoulders should play out to. So I'm looking at that and thinking, well, you know, the technical picture says this, but to me, but then when I think about the fundamental picture says the same as you, and it just says that, you know, it says the NASDAQ just isn't going to get there. But yeah,
to be honest, it's a mess right now, isn't it?
Yes.
If you look at that chart, and the reason, and the only reason that I just want to get into it, I want to get into trading these indices, and I just want to see how they behave. So I'm only trading them 0.25%. It's no big deal.
Yeah, I really like it, mate. I really like the trade, because the thing about you know, any kind of bullish pattern like this is that it's actually got a propensity it's more likely to fail than it is to succeed. Because you know, inevitably what drives us down to this particular position is negativity. So if there's negativity in the market, just because it's formed that higher low, the question has to then come through: what has changed? And if we think about what's driving the NASDAQ lower, it's to do with the US dollar. It's to do with the fact that we got interest rate hikes, continuing to kind of go. It's to do with your point about Friday is right on the money. I'm finding it difficult to see the NASDAQ going anywhere before Friday. And it could just be an explosive move. If the bulls manage to kind of get what they need, which is the CPI data to come out weaker, I suspect we'll probably see something like that, almost straight away Friday. But of course, if the reverse was to happen and we get sort of this embedded picture with inflation, then we're going to probably see something like that. So it's literally kind of it's a flip of a coin in a way.
It's binary, yes.
It is binary. How do you guess on what's going to happen on Friday? It's very, very difficult. And all I'm sort of like now doing is saying, well, regardless of the number on Friday, even though the bulls may well get their rally in play, the picture is so negative at this particular stage. It doesn't really matter. This market is going to drop, and it's just a matter of really when rather than if. It's going to, in my opinion, there's almost no question that the stock market drops another leg down, another leg lower. We've come a long way, to be fair, with the NASDAQ in comparison, but we are now in a bear market. So I think at least testing these lows again is on. And with the Ftse really has behaved in a completely different way. The Ftse, look at where the Ftse is in comparison to the NASDAQ, right near the highs, which, this is a weekly chart, right near the highs, which makes the first trade here on the short side sensible, in my opinion. But when I sort of like consider the potential for adding to this position, we would still be in this region up here. So if we can get another short position on here, then I think it's quite good. The difficulty is the Ftse's makeup is very different to the likes of the NASDAQ, because we've got BP and we've got Rio Tinto and Anglo America and Glencore and Shell, which are at the top end of the Ftse. And those guys, because we've got this commodity-based rally, those guys are kind of like, allowing the market to stay relatively buoyant. In fact, not even relative. Well, it is relatively buoyant in comparison to the NASDAQ. I mean, it's relatively explosive in comparison to the NASDAQ. So it's staying where it is. But I think the flip of that argument is it won't matter what the makeup is with the Ftse when you just get this squeeze on the risk-free amount that you've got to make back with these stocks before you make any profit. And the risk-free amount is obviously, that comes from the bond yield. Because, Rio Tinto, as I say, Rio Tinto, Glencore, BP and Shell, they've all rallied quite heavily already. So because we're near this top line, same with the bonds. You look at a bond, you look at the 10-year on the US 10-year, you look at the bond yield and you look at the bond price. They're all sort of floating around like major support on the bond price and major resistance on the bond yield. It's bashing its way above the sort of around about that 3% mark. The likelihood when I look at a chart is that is just going to collapse. That's just going to thunder all the way down. But there's nothing really that would suggest that that's going to happen in the catalyst side of it. You just kind of think, well, why would it do that? It's much more likely if we get this embedded inflation scenario, it's much more likely that those bond yields have to continue to go up for right now. So it could go through that level, but then it starts to get into the dangerous zone of being so overcooked that anything is just going to start driving it right the way back down again. And I think that's going to happen at some point. I think the NASDAQ is just going to pop hard. I think the bond yields are going to pop hard to the downside at some point, because it's almost coming down as fast as it went up with the NASDAQ. So the turnaround is going to be pretty aggressive. But the only thing I can think of, mate, when I'm thinking of what would drive it in the opposite direction, the only thing that kind of comes to mind for me is a reversal of monetary stance. And if that is driven by inflation, we need to see those inflation numbers really sort of, start to come off a little bit so the Fed can slow down the bus. And this is why when we look at the NASDAQ, I think we go, well, Friday is pivotal. if Friday's number shows that inflation is sticky or even elevated, the Nasdaq's coming down, I would have thought quite hard. But if it's sort of showing that the Fed's action is starting to work a little bit, then we might start to see the push to the upside, because the 2% interest rate is probably now priced in. The question for the market is, do the Fed go beyond that? At this stage, I don't see how they don't. I think they're going beyond it, in my opinion. If they think their tools are the things that going to make it work, they're going to go beyond it.
But do they come to the realization, which is as I understand it, and I'm no economist, but I tend to use logic, and what I hear coming out of, I'll call them experts, outside of the Fed, I don't consider them to be experts, is that inflation, and we all know what's driving inflation, and it's got nothing to do with normal circumstances. Normal circumstances can be combated, if you like, by what the Fed's doing. This is not normal circumstances. And the only thing to me that can change inflation at the moment is if the supply chains start to work and we actually get product moving around the world. And for that reason, prices come down and the cost of living comes down. Oil comes down, although that's got a problem with the war, I know, and understand that. So it's not cut and dried by any stretch of the imagination. But to my mind, the Fed's not going to stop inflation. They might be able to temper it a little bit. The only thing that can stop inflation is if the cost of goods and services come down. And the only thing that's going to drive that is supply chain, as I see it.
Well, there is one other thing that they could do, which I think that they're probably driving towards, which is if we get a recession and there's unemployment, unemployment starts to spike, that will also start to dampen demand. So you either sort out the supply side or you sort out the demand side. So if they were to dampen the demand side, because people aren't able to kind of afford for these things to happen because of unemployment, then that would be the normal route to helping the situation with inflation out. But as you said, mate, I mean, how do you do that with essentials? I looked at the retail sales numbers.
That's right, they're essentials.
They're essentials. The retail sales from, I can't remember which country it was off the top of my head. I think it was Canada. I believe it was Canada, and Canada are really doing very, very well out of this whole thing. Their trade balances were amazing. Like, they smashed it to the point where I think they've got a trade balance, a trade surplus of 5 billion, which is the highest number in over a decade. Like, it's just, that they really are benefiting from this whole thing because of the price of oil. So
the only problem with that is tomorrow it's only worth 4 billion. Because of inflation.
Well, absolutely. Well, again, the CAD's going to tank when this whole thing gets sorted out. But my point was going to be that on the retail sales details, when you look at what is driving the retail sales right now, it's fuel and food. So if the Fed think they can fix the demand side by creating a bit of unemployment, then it won't fix the actual problem, because people need fuel and food. You need energy. In whichever form it is, you've got to have energy. If the retail sales were being driven by luxury items, fine, no problem at all. You could probably do something about it. You could probably do something about some of these prices, but it's not. This is a commodity based market, and you need fuel for everything. It doesn't matter what it is. You've got to have oil. Whether it's
everything stops
solar
without
panels.
it. The world
Everything, exactly. To process the food, to make the food travel, all this stuff. So to me, I think the system's broken, really, and they probably will have to break it further. Some to try and save face, because how can they sit back and go, we're not doing anything, because then they'll all be out of a job, as will Joe Biden. As well, every other country's leader will be out of a job if they sit back and say we're not doing anything about it. So they've got to do something, but they are going to break. And the system's broken, and I think it's going to break further as they increase policy. Obviously, today we've got the ECB. They're about to move. They're in no position to be raising interest rates. You know, they're also in no position to be reselling the bonds that they bought back into the market, which the Fed are also doing, which again is going to drive the interest rate higher. So it's just, you know, I guess it's just about what level of break do you want to get to? You know, what level of broken do you need to get to?
Yes,
before you
I mean, really, we're describing a horrible mess that is not going to unravel quickly or easily. Certainly not easily.
Do you remember when you remember when the war was announced, mate? Any idea?
When this
Ukraine invasion, yeah.
It was about, where are we up to? I'd say early February, first week of February, second week of February.
Okay, so February. So we've got March, April, May, June. So we're 4 months in.
Yeah,
4 months in
to
to what is probably going to take at least a year, if not longer, to sort itself out. So, you know, we're 4 months in, and people are still expecting to kind of get through this relatively unscathed. It's just not going to happen.
No, it's not going to happen.
You know, no. and I wonder whether it is even 4 months. It might even be March when we kind of got the whole sort of, you know, the headlines hitting about Ukraine. You might be right, mate, but it's 3 or 4. It's very early.
I'm plucking it out of the air, mate.
I would have done the same, which is why I thought I'd force you to do it. But it's very early in the cycle. So it's a mess. It is a mess. But you know, and then you sort of like start going, okay, well, how can I trade that? Well, the first thing you can do is short the NASDAQ, which is why I like your trade. You know, in a way, to me, it doesn't matter where you get into the NASDAQ, just get in. The stop question is the big thing.
That's right.
Timing's a bit more tricky. But if you're not going to use a stop, just get into the downside. Do you trade gold? Well, gold's been a terrible performer, really. You know, gold we're about to go into a scenario where gold is going to hit its seasonal long, the second week of June, which is next week. It should come down one more time, and then we start to see a seasonal long with gold. Will that happen? Well, it should. It really should. But can it while the Fed continue to raise interest rates in the manner that they are doing? Because obviously the bond yields go higher, and that's just a bit of a choker for gold. You know, as well as the thing has performed in comparison to other things, if the market is to collapse, gold will collapse with it, because people will just sell everything that they can get their hands on. So gold is another big question. I closed my position, by the way, with gold. So I was long on gold at 1820, and I did okay out of it. You know, I'm not going to say I did well, because there was more on offer than I took profit on, but I did okay out of it. And the only reason I ended up closing it is because they were charging me so much in swaps. I was like, I'm not paying that, because if this just bobbles along sideways for a while, then it's just eating away. You know, so what had turned into something quite decent. So I ended up closing the position, and then and subsequently it has gone nowhere. You know, so I don't know what happens to the gold market. You know, and I will kick myself when it rallies and it explodes.
Double top still there, mate.
Yeah, I'm getting a bit like you about it. I just like, you know, it's just a pretty I find it quite a dire market to try and trade.
Well, you said it yourself. Why? I've got to ask myself the question: why isn't it now a hedge on inflation? Whereas,
why isn't it exploding?
Yes.
Yeah.
Why isn't it?
Yeah.
Why, you know, precious metals should be just going like that at the moment. Yet it's not.
Yes, they should. Yeah.
And if it's not, I can't find the answer as to why it's not. But generally speaking, if X doesn't happen, then Y will.
Yes. Yeah. Well, as I say, man, I think with the collapse of the stock market, we'll probably see a collapse in gold as well. I don't see why that wouldn't happen. You know, because people are going to sell everything that they've got, and you know, I think everything is at risk right now. I think Friday's really going to be really interesting, but because realistically, Friday needs to fix the inflation number to such a level to suggest that we should actually be going long on equities and everything else. That it's just an impossibility. So Friday being a benign number, negative for the stock market. Friday being a bad number, negative for the stock market. Friday being a positive number, ultimately negative for the stock market. It has got to be a game-changing number, to use your terminology, to really, create something which suggests actually we're okay here. We can start buying up again. So yeah, lots to think about, mate. But as I say, in my opinion, you just kind of like need to get into a short position and ride it out and see if you can add to it. I don't think we're going to get to add to the Ftse. I think we might have missed the
that chart there before you leave it. I mean,
yeah,
that's just as clear a false break setup as you'll see.
Up here.
No, if you use the previous swing high, that obvious previous swing high in April, there, and draw a trend line or a trade line in my case through the high, yep. That's just screaming at me. If price goes back down there, it's out of here.
It's down.
Yeah.
Yeah. Yeah.
And also, if you draw one from the bottom, if you go to the swing low, that hammer there at the next one across, little one, other way, that one, and yep. So that's a break and retest for me. I mean, I know it's more than a retest, but again, it's telling me exactly the same thing. If price goes back to the bottom of that candle, it's out of here. It's gone. It's gone.
Yeah, which is interesting. I mean, there's lines all over this one, isn't there? They're literally everywhere. Yeah, it's just too tough anyway. So I'm leaving that one be. It looks like the Ftse is not going to give me what I needed. I needed this level here really, and I got a sniff, but not quite as high as I'd like it. But the Ftse looks negative. I'm okay about this because I'm already in short up here. But I'd quite like to add to this really. When you look at this sort of like on longer term timeframes, though, a break here of this bar here on the weekly suggests we're going into the into this point here. And really, there's every chance with the Ftse that we get a genuine move down to this point here. There's a decent chance. People are not interested in levels right now. So that's where I'm at, mate. I don't know. Have we got John today?
Well, we're due to have John, but I can't see him in the room. So maybe he's not in. I don't recall seeing a message. I haven't got Skype open. Maybe he's talked to us.
I will. I'll have a look on Skype. I'll have a look on Skype as well. I don't know what. So, all right. Well, let's continue around the grounds then, mate. Let's talk about oil.
Yep.
And see where that is. Actually, let's talk about the VIX really quickly. This I think is quite interesting as well, because with the VIX, that I can't think of the word, but the propensity with the VIX is that when the stock market starts to come down, the VIX pops up. Now, if you look at the VIX on the dailies here, so this is really the VIX since May down to where we are now, and if you look at the Nasdaq since May, it's almost completely opposite. You look at the S&P, almost completely opposite, and they do tend to kind of like have inverse correlation. Mm-hmm. But I wonder really whether with the VIX, even though we should see it like ease itself to the upside, I wonder whether this is going to be like a slow choke for the stock market rather than anything significant, because we kind of know what's coming. I think the VIX tends to do better with a highly volatile market. Now, is this going to be a volatile move to the downside? I mean, I suppose they all are really, but I don't know how volatile. I think it's going to be as volatile as it could be. I wonder whether it's going to be just a kind of like a step and then a step and then a step, because the ECB, the Bank of England, the Fed, the Bank of Canada, now we've got the Reserve Bank of Australia. All of them are kind of coming out and saying, look, this is on the horizon. We're going to be raising. It's on the horizon. Yep. So with people knowing that stuff, does that mean we're going to get like, this kind of small choke of assets, and that doesn't really sort of help the VIX out? in many respects. It doesn't make the VIX quite as useful to purchase. I don't like the VIX as a buy personally. I think, yes, I could understand why you would buy it, and we're getting relatively close to some levels here, which could be of interest. But the VIX to me just looks like it might well kind of part company with the S&P move lower because of the kind of the what we know about the potential downside. So I don't like the VIX, and this is really a question of where you're going to put your money. If it's not going to be in the S&P, where you're going to put your money. To me, it's not the VIX.
Oil. Where are you going to put it? But
well, let's figure it out.
And to go back to your point, I feel it's going to be completely the opposite. I think we're going to have an almighty move at some stage, but what triggers it, I have absolutely no idea.
Yeah.
Absolutely no idea. But I think the shock wave will be enormous when it happens. Because everyone's on tenterhooks now.
Yes.
Everyone's alert. Everyone's ready to dispose of their assets or change tack or go move it to wherever it needs to move. They only need a trigger.
Yeah.
And if that trigger comes, it'll be like a bonfire, a match under a bonfire. It'll just go nuts. That's what I see.
Do you know what the other sort of side of it is that the conflict in Ukraine could actually get ironed out. I think that's really interesting at the minute. We got Macron. Macron's basically saying to the rest of Europe, don't poke Putin. Make it easy for him to kind of come back into the fold. And you've got the likes of Boris Johnson in the UK saying, no. He's committed war crimes. We are going to kind of go after him effectively. You're going to call him out. And I can't get over the stupidity of that, really, guy. But in this particular situation, I think he's right on the money. I think, of course, you've got to kind of, if this is not about embarrassing somebody. I know it's a bit bigger than that, but it's not really at this stage. It's not about convicting somebody for what they've done. This is about stopping the destruction and pain that is currently being caused, in my opinion. Right? I think we need to sort of like say
you've got to start there. Yes.
You've got to stop
the rest
it first.
Down the track.
Yeah. You've got to stop it. You've got to. Okay.
Makes sense.
You can't sort of. You can't say, look, you can have these bits of land and this thing if it stops. You can't do that. I agree with that. But I think you've got to make it, put it in such a way that actually the side of stopping attacking Ukraine is more attractive than continuing. That there is a squeeze going on with Russia, but they can't really do it quick enough in some respects because they've been so reliant on Russian energy first and foremost. There's got to be something that can be done to kind of just get him around the table and start talking. But there's this split, and this is the thing about the UK and the US. The UK will just follow whatever the US says that it should do. So
Australia's the same.
Apart from what about the US, they'll follow the US.
Yes, of course.
Yeah. Well, apart from
because that's the big defender of the countries, right?
Yeah.
I mean, military speak is what I'm talking. If Australia was attacked by anything or anybody, which seems unlikely, but let's say China attacked Australia, and there'll be many people who are negative thinkers, if you like, in Australia, suggesting that's the case because China are making their presence felt in the South Pacific. So they're getting bases formed in places like the Solomon Islands, which they've just done. And now you've got our new foreign minister, running around all over the South Pacific saying, don't sign with China, don't sign with China, don't sign with China. So, there's a destabilizing effect going on there. But what was my point? I've forgotten my point now. I've gone completely off tangent.
Oh, just about the fact that Australia is
right, yes. So that if that actually became a threat, Australia's got no hope. They might as well just. I think we've got 8 submarines and a couple of aircraft carriers and a handful of planes. What's that going to do? That's just going to stall off the inevitable if that were the case. So you need these allies in times of trouble. And America is the obvious one for Australia, and same UK, I would imagine.
Yes, yeah, it is. It is. This so just back to what do you trade, mate? So oil is a possibility. Yeah, oil is a possibility. I know it's high. I know it's going where it's, but again, you know, you sort of like say, well, why would it come down? I haven't got any reason for oil to come down. Supply
and what
problems
about gas, man?
Unbelievable, unbelievable, and gas is even worse. So in fact, let's bring up gas. Gas is even worse because because it's even harder to transport. Where is it?
And as you say, what if you look at the chart? You go, "There's no way I can buy that."
Oh, here it
but
is.
what's going to change anything?
Well, you could buy it now. Look at this.
Yep. Didn't see that.
Yeah, I mean, well, in fact, now you wouldn't be buying it, right? I mean, it's sort of like this is actually sort of looks like it's on the turn. You'd want to try and get it down here if you could, but it looks like it's on the turn for whatever reason. Maybe there's some sort of build. But oil, gas, and I guess both the oil and gas, you've got two choices. You either buy it and hope that it goes higher than your price, or you wait for a potential catalyst to turn this whole thing around, which would probably be some sort of resolution of the conflict, and then they're both tanking. You know, particularly oil, I would have thought is just getting obliterated. So the other option, of course, is that you just leave your money, you just leave your position in cash. Just hold it in cash until you can find the position. But this doesn't look good. Going down the list of the currencies, the CAD is, as I say, trade balance is amazing. And while oil is where it is being shown really because they're so rich in commodities and of course oil. The CAD and the Australian dollar seem to me like decent options. The one thing about Australia which I don't like is its reliance on China for that, and I don't like the tensions. Canada's a lot better because their next door neighbor is the US, so they're less likely to have tensions with the US. So I prefer the CAD for that one reason. That's the only reason that I go for it. But I would sort of like lean towards the CAD, but I wouldn't be trading at the Aussie CAD. Not a chance. Then you kind of go down the list. Okay, well, what would be one to trade it short against? The Swissy, in my opinion, is not an option because they are pretty solid. You know, the Swiss economy is pretty good. You know, if you were going to put your money anywhere which would represent some kind of safe haven, it would be Switzerland. Would you go to Japan? Probably not. The way that they're the way that their monetary system is structured, still, understand their safe haven status, but you wouldn't put it there because they don't have any inflation. You know, they're sort of another economy which is in a bit of a mess.
It's impossible to have any confidence in it, but again, gravity will at some point gravity will grab, and that yen, every yen pair that's just been skyrocketing will turn at some point.
Yes, it
will.
How
far? I don't know how far it can come down. That's the only thing.
No, well, I don't know. They also need to change tack. I would have thought. And then, but the ones that seem to be the easiest ones to point to is number one, Europe, and number two, the United Kingdom. Those two to me look like the two weakest regions, potentially, because you've got geographical aspects. You know, the fact that they're so close to the problems. You've got dependency aspects, the fact that they buy so much of their stuff from the region. And you've got the fact that they are not well. In fact, then you've got Brexit. Those two really, that they are slowly kind of like cutting away at each other, and aren't really in a position of strength. The UK export pretty much nothing. They don't. This is the thing. Canada, great, and this is where it doesn't matter how well you run an economy or how badly you run an economy. If you are in the right place at the right time with the right products, you're it. And Canada just happens to be that. The United Kingdom, not a chance. I don't know what it would need, what kind of environment it would need to be it, because they just don't export anything. They don't have anything to sell, and they don't produce anything. So the United Kingdom are, the pound still seems to me like one to go short on if they all raise interest rates. And if they all stay on pat, the pound looks to me like it's in a bit of trouble. Europe definitely in a bit of trouble as well, because again, what does really is the geographical thing for Europe. They're just in such a terrible position with this whole thing. So does that Euro CAD is the first one we'll look at for that. Problem is the price, of course. Come down a long way.
Why did I ever get out of that 12-month trade?
Yeah, yeah, absolutely, mate. Difficult one, isn't it? Difficult. How you find an entry now is quite tough, I think.
Yeah, good luck with that.
What about the pound CAD? Again, tough down here, tough. Don't see it going back, but it's tough. So then you sort of like we're really sort of picking at scraps. We're really sort of like then going, okay, we're going to have to play the strongest versus the strongest, or the weakest versus the weakest, or something in between. Because the obvious ones of now they're just too late.
They've played out. Yep.
Yeah, they've played out exactly. So you've got to then try and assume what's going to turn first, what's going to sort of actually start to see some benefits first. And for me, it's the Swissy. I mean, that's sort of like the one that I kind of I'll look towards. And let's have a look. Euro Swissy. You had something on the Euro Swiss, didn't you?
On the weekly, yes. That's just going back to the top of the range. But gee, it's a strong buy so far this week, anyway.
Well, the Euro Swiss is a buy.
Yeah. Yep. Well, they're buying it big time. But again, that goes back to technicals. I've been pointing that out for quite some time. That level is undeniable when they got decoupled.
Yes. I wonder whether for me the euro is a short against the Swissy, and I wonder whether it comes up to these levels here, and then you look for another leg lower.
If it could come to that trend line and at the confluence on those lows, that would be awesome. That'd be an awesome sell point.
And the other one would be the the pound Swiss as well. Where's the pound Swiss? Boris Johnson won his confidence vote. I don't know. You probably saw that.
I know, he's unbelievable.
Yeah, he is, because he doesn't care. Where Theresa May, there's probably sort of something along here where Theresa May, when she won the confidence vote by actually a better margin, she was out within 6 months. Boris Johnson doesn't care. Yeah. He's just like, whatever. You can't now take me on for another year, so I'm just going to get on with it, and I'm sticking around.
I mean, I've got to say I'm surprised, because really what's unfolded into those or out of those parties is just really unacceptable for a leader to do. It really is unacceptable. Yeah. I mean, when you think of people who couldn't get home to nurse their dying mother, or things like that.
That's the argument, mate. That's the argument. But you see, Boris Johnson is a sociopath. I mean, he doesn't really seem to anyway. Doesn't seem to really care about a mistake. He's like, next thing, that's done, forget it. Even though everybody else is like, no, it's not done. He's like, yeah, it's done. I'm just getting on with it. They won't oust it. He won't go now out of what he would believe is duty. He will continue to stay there and try and get people to forget about it. And some people possibly will. I mean, the people that the voters, unfortunately, I think the voters have been exposed in this country because of what happened with Brexit. They've been exposed for kind of jumping on things that seem actually sort of like quite weak reasons to decide something. So who knows which way people will eventually fall with that one. But he certainly survived another one.
Yeah, look, I think going back when Trump was elected, with drawing similarities between Trump and Johnson, but I really didn't see it as clear now as I do. I mean, they're extremely narcissistic. That's narcissistic behavior. Really, it's not good. Yeah, and shouldn't be forgiven. I believe he shouldn't be there.
No, you're probably right, mate. But I mean, we are struggling to look
We are
for
we are
what
struggling
to
to find
trade.
something of interest.
But I
But
think, this is another interesting one, the Aussie 200s. As soon as the RBA announced those interest rate hikes, bang, the Aussie Aussie 200 comes down as well with it. So I think we could, and look at that. I mean, that is as clear as day. This going on. Look at that. It's on a daily. And actually, this is on a daily, so we probably could have a look at this on a weekly. Yeah, look, it's there again. In just a lovely little head and shoulders. Well, little head and shoulders, lovely head and shoulders pattern going on here. So neckline is potentially going to be tested here, and given the situation, you'd say this is going through. And if that was to happen, could be looking at a measured move of something like this. That brings us down to this point here at 6,700 on the Aussie 200. So I think you could go around and look.
My forays into these indices aren't working out too well, but I tried to trade that short 2 or 3 weeks ago,
right,
and didn't work.
Yeah,
but I think I'm getting there. I just need. I haven't got my stop in the right place.
Yeah,
I'll work it out.
Yeah. It's a tricky one where to know, where to put these stops, because the desire for people is to buy stuff. They want to buy assets, and as the turn kind of comes in, it does tend to be a bit of a grind with equities. So as the grind comes in, you keep getting these big runs to the upside, then every sort of flips a position again, stops get taken out, and then all of a sudden it's down again. So not easy, mate. I'd certainly appreciate that. I mean, the way I always look at it is, if you can get at the top end of the range, and maybe put a stop at the top end of the range previous to it, you should be okay. But it is tricky, and it's probably sort of like something that needs a bit of focus and a bit of practice. I mean,
I'll get there. Don't worry.
Yeah, you will get there. So look at the difference here. This is the Japanese. This is the Nikkei.
Mm-hmm.
And I think this is interesting. People sort of like think about sort of the difference between indices and currencies. Look at the connection here. You've got the Japanese kind of stock market holding. It's not doing amazingly well, but it's holding. This is holding a position up here. You've got the Australian stock market starting to look like it could start collapsing here. These guys are raising interest rates, relatively aggressively. These guys are doing something completely opposite.
Yep.
And this is where the you could have a spread trade. It is another option. You have a spread trade against two indices that go long Nikkei, go short Aussie 200. It's another potential possibility as well, and it's quite a good thing to do right now. Spread trading on two products that are in MT4, because if you can create your own spread trade, then at least you are taking some of the risk out of the market. If you are wrong, and those stops kind of change position a little bit, you would have to give yourself a bit more room. But as I say, this has looked really good all month. This is a monthly chart. It's looked really good all month. Really, for the last 2 months, the Nikkei's done pretty well. Now look at the German thing here as well. Now this is on the monthly chart. So today we get the ECB, and they are Christine Lagarde is likely to say we're on our way. So then this becomes really interesting to try and take a short on.
Yeah, she really can't not, can she?
No, definitely not, mate. And we're in the area. This looks pretty good. In fact, mate, I would consider this, because you've got it's quite a bit of it depends on sort of how you're gonna trade it. You could would you trade this bar here as a potential, the most recent?
Hang on. It's getting close, but not yet.
Not yet. Okay. Well, that is the sort of thing that we got going on. We've definitely got a break of a trend line here. And we've got a potential catalyst. So this comes back into the daily pivot. To me, that looks like a short.
Yes, that's long. What I'd be looking for.
Yeah. And we're literally just going down the list. We're literally going down the list and saying, well, where's there still an opportunity? I think we've just arrived at one. I think that the German 30 is an opportunity. Short this market if we can. And see what comes with it, because there's still room with this one. You look at this on a weekly. There's still some room. Top end of the range, come down to the bottom end of the range, and maybe beyond. That looks like it's got some. It's got a chance to kind of actually return something. Same with the monthly. It looks like the first lower low, and again a potential collapse. Who knows? Possibly even down to there. Don't know.
The Aussie 200 looks better.
You prefer the Aussie 200?
Well, it looks better on that chart than that chart.
Do you know what though, mate? The only reason I would say that the DAX may well win out is that the RBA have already kind of said their piece, and we've seen a decent move because of it. The Christine Lagarde has not yet said her piece. So when she says her piece, I think this will probably start coming down. If it doesn't, timing all wrong, forget it. But if you're looking for a driver, then there's a potential one later today.
Yeah, fair enough.
So this one would look pretty good for me. This is the same. Look at that. This is the Cacaron. So another potential lower low coming into play here. On support right now on the daily, so not quite as good. Similar bar though, very similar bar as we just saw with the DAX. Could we justify it? No, you can't really. You need sort of something else with this one. So actually, the technical picture doesn't quite look as good. Oh, that would look okay. You're looking at that. You're looking at an hourly. Daily pivot looks good again, but both of them daily pivot, in my opinion.
Yeah, nice level. Tell me, have you got anything on your radar? And I've been talking about this for a while, but I haven't really gone into it. On uranium.
No, mate. Do you know, you asked me about that. I wouldn't have a clue. I honestly would not have a clue. I don't know anything about uranium. I haven't even read anything of note about uranium since we started talking about it. I can't trade it, as far as I'm aware. I mean, my other broker has got a lot uranium. Oh, sorry, no, I can trade it. Uranium Royal Corp in Canada. There's a company called Uranium Energy Corp in the States. There's one in Canada. I could trade it. Okay. I reckon it'd be hyper volatile.
Have a look at those charts if you get time over the weekend, and let me know what you think on Monday.
Let me just make sure this is free. Are you sure you're going to activate?
Because it makes sense to me, and certainly from an Australian perspective, because I think we've got a whole stack of it under the ground. That if oil continues to stay at these levels or even go higher, and gas, same thing, you can't get solar as a base load power at the moment. You can't get wind as a base load power. You can't get tide as a base load power. So what can you get? And the world is short of uranium at this moment. It's short of uranium. And you've got, to the best of my knowledge, I'm not sure where it is, what country. But I did hear the other day that somebody has just began building or finished building a whole bunch of power plants, nuclear power plants.
Okay.
So to my mind, demand is about to go up, yet supply is very, very low and defined.
Right. Yeah.
So to my mind, if there's any reasonable reason from a chart perspective to buy anything that's to do with uranium.
Okay. All right, mate. Well, I will have a look. But, if you've got a pen and paper, because you can check your charts.
I've got three or four miners in Australia that I can I can invest.
Okay. All right. Well, you got a few there. I mean, actually, there's a global X uranium ETF in the States.
Yep. Yeah, I know that one.
Okay. Well, that's probably the one I would look for. Because it's just a bit more broad, isn't it? There's also Sprott uranium miners in ETF in the States.
Yeah, that's they've been buying up everything. You might want to have a
I'll have a look. I'll have a look at that.
Yeah, have a look at Sprott. They just continue to buy everything that's available.
I mean, you might well be. Do you know? I mean, it's, you know, my kind of my first thought is I can't be bothered to kind of get into something like this. But my new thought now is like, actually, you may well be right on the cusp of something that is hyper early. Just like everybody with cryptos, you know, and what happened to crypto? Everybody's like, crypto's crypto. Then all of a sudden, bang. So we might actually sort of see something like that with uranium. You might be onto something, mate. I'm going to need to do some more research on it and see.
Yeah, if you get a chance over the weekend, just have a little look, in particular at that company.
Oh, I'm not seeing a chart on that. Okay, I'm gonna check the chart out first, but I'll have to do some reading up on uranium.
And anybody who's in Australia, if they just want to have a look at a few, there are miners just starting now. I know one company who's got a couple of mines just ready to start mining now. They've just been given licenses.
All right, I'll look into that. Sorry, Richard, I've literally just seen your question there, mate. Have you contacted James about that? I don't really have anything to do with the admin side.
I can't see the question.
No, it might be a PA. It's just about the Telegram group.
Oh, right, okay, sorry. Yep.
And I would write to him, but it's just easier to sort of say, oh, you have, okay, mate, all right. In that case, if you have, and but you haven't been given a sufficient an answer that is adequate just yet. Okay, all right. In that case, I will chase that up for you, mate. I will chase that up for you. So you want the other one, right? No problem at all. Sign up for the you want the Forex. Okay. I will chase that up for you, mate. I'll do that as soon as I get off air. I will do that. Talking of getting off air, mate, I think we're pretty much there, aren't we?
Yeah, I don't think there's anything more exciting than I've already divulged that I'm looking to trade. Everything's going kind of standstill or the opposite direction at the moment, and that's fine. Don't have a problem with that. So I'm actually looking for pound strength over the next short term anyway. More so dollar weakness still, I think. The dollar index is still telling me that it's under pressure. And we do have almost a game changer, an inside bar today on the dollar index. So again, that's suggesting to me that there's going to be some dollar downside. Not sure why.
Interesting. Yeah.
Not sure why, but I dare say the CPI numbers might have a bit to do with it.
Oh, mate, yeah. I said the dollar's in that kind of phase, isn't it? Where we didn't talk about the dollar actually. The dollar's in that phase where it's starting to. The people are losing a bit of love with the dollar for sure, and I wonder whether that might be because things are priced in more than anything else. And we might not be set for any, because we might just get this. What we got, we were in June, July, August, September. We could get another 6 months of sideways consolidation. We've seen rally. Look at that, bang, rally. We've seen NASDAQ, bang, rally. In fact, we've seen over the course of the last couple of years, rally. So it would not be out of the question to all of the, over at least the next 6 months, to see prices just doing something benign.
Well, the only thing with the dollar, of course, is that we can't lose sight of. And if it weren't the case that the dollar was the reserve currency, it'd be at 50. It wouldn't be at 100, whatever it is.
Yeah, agreed. Yeah.
If 50, maybe it was 25. I don't know.
Yeah.
But it wouldn't be where it is. That's for sure. It wouldn't be anywhere near where it is. And I don't know how this Russia thing pans out, but if the world starts buying oil in rubles instead of dollars, that's going to make a massive difference.
Yeah.
And if for whatever, it's not if, but when, in my mind, that we have an alternate reserve currency or system, I don't know if I can call it a currency, but it's the instant that happens, the US dollar is worth like 1/10 of what it's worth, I reckon.
Yeah, agreed, mate. Agreed. Yeah,
but
well,
that's not now. Again, it's timing.
Yeah.
Where do you put your stops?
Well, as you know, it's well, this is the thing. We talked about all the sort of issues in the world about oil and Ukrainian the Ukrainian conflicts and all this sort of thing. We've almost kind of forgotten on this particular episode of Trading Buddies to forget the fact that the central banks have helped cause this by overprinting.
Yes.
They've sort of like they've been getting high on liquidity, and then and the chickens will eventually come home to roost. And with COVID in just a very, very short memory away, coupled with the Ukrainian conflict, then this seems like the perfect storm. This seems like exactly sort of the catalyst that we need to sort of like start going. You know what, guys, this was coming. You kind of, and it wouldn't have mattered if they got enough of a period to be able to kind of get rid of some of that liquidity, because they were so high on it and they were so kind of overconfident with it. They would have probably done it again and again and again. But what goes up must come down. And
they haven't stopped yet.
They haven't stopped. No,
they're having a brief pause in the amount that they're doing, but they'll be back. I mean, the Americans are world champions at it. And, by the length of the straight, they're the world champions. They won't stop. Yeah,
well, the ECB are pretty good as well, to be fair.
Not as good as the Yanks, mate. They're unbelievable.
No, well, then they're not. They're not. Anyway, mate, we must push off. Richard, if can you remind me again on Monday if we're in? Not remind me, just check in. If things haven't been sorted out, just check in, just because I just want to make sure we stay on top of this. And I'll continue to follow it up for you, just so I can get a sufficient answer for you. So anyway, let's push off, and we will we'll be back Monday. Everybody have an amazing weekend. I would look out for that CAC on, look out for the DAX as well. Potential trades on there. Everything else, I don't really see anything.
You've got your homework to do.
Yeah, looking at uranium. I've got it.
Righto. Thanks for being our trading buddies, everyone. Thank you, Marlon, for looking after us. Have a wonderful weekend, Ash, and everyone else. Will catch up with you on Monday.